PDAC 2019, ladies and gentlemen. It's now the afternoon on the first day, and we are at the booth of Revival Gold. You remember I interviewed Hugh, Agro, who is sitting actually here beside me, the CEO, in January, and also we have Rochacewich here with us, who is the CFO, meaning the number guy. And we want to talk about Revival, of course, short update, and then we want to talk about the industry and what's up there. So, guys, welcome. Thank you very much for taking the time. Not usually I have already the CEO and the CFO, but it's perfect. I like that. So first question for you as the CFO, of course. You are doing a financing right now. How is it going?
Yeah, that's correct. We announced the $5 million private placement brokered financing a couple of weeks ago. We've got great support from our current shareholders. We've had it open through BMO and through the PDAC. We're looking to bring in a couple other big names that we're working on now, but all in all, it's going very well.
So you have very good interest?
We do.
Super, perfect. And question to you, Hugh, of course, when you get the money, what you want to do with that?
Oh yeah, well, you'll keep us honest.
Yeah. Don't go for shopping, please.
So, of course, we're looking to expand the resource at Bear Track Arnett. This year we're into Arnett. We're in the process of completing permitting on the Arnett property position right next door to the infrastructure at Bear Track. So we'll be out there extending the drilling that we ended last year in oxide material at Arnett and moving out to targets beyond the initial area of focus. Yeah. So it's a big year of drilling, but we're also doing metallurgical test work. We've got a second phase of metallurgical test work at Bear Track, and we will be doing metallurgical test work on the oxide material to update ourselves from the 1990s work that was done in that area.
Super. Yeah, and I think you already had some good numbers in the metallurgy, right?
We did. We did a first phase of work on the sulfide material, and we got good results on the flotation results. Now we need to look at the pre-oxidization step, so we've got a second phase of work in that area. We want to try and do better on our flotation recoveries if we can, and then we've got to do variability testing. That is, we've got to test the ore body and all the different lithologies in which the resource is hosted. And so these are just normal steps along the way as we move towards building out the resource and ultimately moving towards economics.
Fantastic. So economics, that's also something we want to talk about. What is the, I would call it the status of the gold industry these days? I mean, we had a bumpy road last year. Right, gold went up, went down. We are up again at the, let's say, 1300 level. Then on Friday, just in time to the PDAC, a $20 drop. Yeah, hopefully tomorrow this works a bit better out then in the market. So what is the status in the industry, I would call it, yeah? And how do you see it, especially with the merger mania here?
Well, let's step back to 2009. 2009, we started to sow the seeds of our own demise in the industry. By 2011, the gold price topped out, and then we saw a bottom in 2015. So this is the cycle of the industry, and this is a feature of the industry that we have to live with. The question is, how can we tell when we're close to a bottom in the equities? Gold prices bottomed out. That was 2015. We saw sustaining capital expenditures, exploration expenditures bottom out. But how do we tell when the industry is going to come back? And I would say the mark of that is this merger activity that we're seeing in the industry right now. Yeah. Remember back in late 1990s, we had the initiation of a merger wave in the gold sector. These were transactions in the order of about $2 billion, relatively small in our terms, but back then those were big dollars. And it wasn't until about 2002 we got the big wave of mergers coming through. Placer Dome had its merger in 2001, 2002. We had 2002, the three-way combination with Kinross Gold, TVX, and Echo Bay. It was at that point, when investor apathy was at its worst, that the sector really started to consolidate. And that was the setup for, of course, the next few years, which was very good for gold equity investors. I think that's where we are today.
Super. So you think we have some positive years ahead of us?
I do, and I think that the sign of that is
thank God.
I think the sign of that is this merger activity. I mean, if the biggest gold companies in the world are looking at mergers as a solution to their long-term growth, that's a sure sign of a bottoming in the sector. Can you imagine producing 10 million ounces a year from these pro forma companies and trying to replace those ounces? That's going to prove very difficult. And that's going to make junior explorers, developers, the cadre of companies underneath those big gold companies much more valuable to investors.
Yeah, absolutely. Because it looks to me like they had a big lack of exploration. in the last years. Yeah, they shrink their costs dramatically, and now you guys have to do the work.
That's right. It falls on us, Adam.
Yeah, that's right.
So the key is stay in good geography.
Yeah.
Focus on veteran teams that have done it before. Keep your risk profile low by investing in quality assets and assets that have more upside than they have potential downside to them. We think we've put that kind of portfolio together. Revival Gold's made great headway over the last couple of years, and our future looks quite bright in the context of an industry that's consolidated and that's looking for safe jurisdictions and large gold deposits.
Absolutely. So I want to ask you, Adam, something here about numbers. Yeah, as you are the CFO, of course, you are dealing every day with numbers and financing stuff. How do you rate, let's say as a CFO, or let's say also in general as a market participant, how would you rate the different forms of financing? Because sometimes you hear, oh, I will never do royalty, I will never do a stream. The other guy says, no, I'll never dilute my company, I go strictly with that. But what is your perception of it? Is it like a mixture, or shall we say, well, the best is what is good for the shareholder?
Yeah. I think there's a time and place for everything, and there's probably room for everything. I think you're right. A mixture is probably fine. There's a lot of factors, obviously, that go into that decision. One of the advantages that Revival has, as you know, is our partnership with the Orion Mine Finance. So at the appropriate time, we will likely have access to a whole bunch of different types of financing, and we have that flexibility, but we don't have a commitment to any of them.
That's super. And I think to have a partner as Orion for a size of your company, that's outstanding, because they can stem every amount almost, right? You need.
That's right, yes. Yeah, no, it's a great scenario for Revival to have such a strong partner in Orion.
Fantastic, super. Question for you, Hugh. How do you rate let's say the country risk in the future? How do you rate in the future, let's call it the risk of trade unions, of I wouldn't say war, but I would say something like, the strike scenario we saw in South Africa the last months. Yeah, I mean, I don't get it. Why do you strike your company completely down, and it's only like 40% of the people working there, and the rest says, no, we want to work, we want to do something. How do you see this situation, let's say, in the future as maybe a problem for the mining industry? How do you think we can solve that?
Yeah, so it's interesting. Again, step back and let's look at history. The Bear Track Arnett project was worked back in the 90s. The former operator, Meridian Gold, left the United States to go down to Chile, where labor rates were about a third the rate of the US, where power rates were about a half to the third, and where permitting timelines were much shorter. Of course, today that's all changed. Today we have a federal administration in the United States that is in favor of responsible exploitation of resources, job creation, and the strength of communities in these rural areas. And we've got labor rates in the United States which are much more favorable compared to other parts of the world. And we've also got power rates which have entirely reversed.
And stable power.
Stable power from good sources.
Yeah.
So you ask me about political risk, general risk in the industry. I would say, again, we've had this pendulum shift, and it's back towards North America as a good place to do business. And investors have had themselves scarred and beaten up in some of these jurisdictions you've talked about, where it looked at one point that we would see less risk and better reward, when in fact it's the mature jurisdictions, those that have a history of mining activity and responsible labor forces and responsible governments that are going to be the future for the business. Now, do we have to work hard around working in these regimes? Of course.
Normal.
Do we have to go through processes that are sometimes arduous? Yes. But at least there are processes. At least there's rule of law, and we don't have exploitive governments. We have governments that want to work with us. This is important to our sector.
Yeah, absolutely. And also I think it's important for the company and finally for the shareholder, because it gives security.
Exactly.
Because you have a strict frame to work in, and you have rules and regulations.
Exactly.
Right?
There's a path forward, and you have the courts as a recourse. This isn't the case that we've got arbitrary governments taking participation in a project after investors have put up all the risk capital.
Exactly.
So we're really excited about being in Idaho, being in the United States. We like Canada. We like some other countries in Latin America, but I would say, you know, for investors today, you've got a lot working against you with the metal price, with the dearth of investment out there for the sector. So let's tick off those boxes that we can naturally tick off when it comes to choosing companies to invest in. Choose good teams, choose good geographies, choose sites that have existing infrastructure and a quick path to permitting. Those are all things that you can do as an investor when you're choosing your investment vehicle.
Absolutely. Guys, thank you very much. Thanks for your time. Very interesting, and I think you do it anyway, right? And great company you have.
Thank you.
Thank you.
Yeah,
ladies and gentlemen, there was Hugh, Agro, and Adam Rochacewich, and you heard it. Everything is in good shape. The company is currently financing, and well, Adam takes care of the money that it comes in. Hugh is spending it, but not for shopping, of course. He will do a lot of more drilling and bring the project forward. That's exactly what we want to have. And as you heard it, Merger Mania is really great and big going on now. So we all think this is the bottom of the market, definitely. And aside the drop of the gold price last week by again below the 1300, we still are very positive. And as myself, Hugh is a gold bull, and Adam, of course, for sure also. So Revival is doing great things. Check out the company. The company is full on track. Thanks for watching us. Bye bye from Toronto.